Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News channel by wavestrategy.com. We are going to discuss about what's happening with Nifty, and I'm sure you might be apprehensive looking at the today's movement of a huge move on the downside, where Nifty really crashed and touched the intraday low around 11,860 levels, and then recovered back equally fast. Sorry, 10,860. And now that's what happens when Nifty changes from 11,000 to 10,000, and then recovered back equally fast on the upside. Everyone is going to talk about the possibilities of Diwan Housing Finance defaulting on its commercial papers, which led to this kind of a movement. But if you really think it doesn't matter much because the news or the event will come out now after the move has already happened, and that too in a very sharp span of time, in a very short span of time rather. And we can clearly see such kind of sharp move is going to be easily, even if you are long, it is going to easily wipe you out of the market for good if you are not using a very strict stop loss and not pre-placing your stops. And if you are on the short side, not necessarily you might have made money because the movement in the morning was sufficient with a gap up of nearly 100 points, and post which Nifty then started moving down very sharply. So doing such kind of movements, it's always better to have a strict stop loss and the entire trend perspective in place. When Nifty touched around 11,760 or approached near 11,800 levels, if you remember, and if you would have been following through the various research reports which I publish, I clearly mentioned that the price are near the upper end of the channel and there is very less room for price to go up. We should start seeing some kind of a nervous sign, and Nifty reversed back exactly after from touching 11,760. So that was the area where we started cautioning our investors and traders who have been bullish on the markets near around 11,700, 11,800 odd levels. From there, we saw a move on the downside, which was clearly a flat correction pattern. I discussed about this pattern as well, which was we started from here, it completed wave A on the downside, then there was wave B, then we saw wave C, which was here, and then after that we completed wave X on the upside, which was very clear. Post wave X, what we are seeing now is again a wave A. Low is probably formed in the form of wave A at the low of 10,880. 866 is there, if that is the low around that level, 860 or 866, whatever. And we can clearly now expect wave B, which has started from the lows. So markets are going to now try to find out a way in which it is going to try to gauge which direction it wants to head. But one very clear aspect that we have been talking about in our monthly research report, in our short-term updates, has been about a clear ABCX ABC scenario, and apart from that, it has been a lower high and a lower low formation. So if you understand the classical Dow theory, a classical Dow theory tells that as long as markets are in the lower high and the lower low formation, the direction of the trend remains on the downside. Over here you can clearly see lower high, lower low so far, and we have not yet seen a close above the prior high. So that's a very clear indication that the overall trend remains bearish even now. So use pullback on the upside as a shorting opportunity. However, there is a very high likelihood the spike low, because of an event which is formed, is going to now act as an important support on the downside. And on the upside, we are going to see a huge resistance towards today's high, which is around 11,330. So 11,330 to 10,850, I would say rather, is the broader range of the market. I know it's a very big range, but that's the range. Markets are going to now consolidate and move sharply within this range over next few days in order to digest the entire event which has happened. Also, if you would have been following me, I've been talking about this downtrend to be start of a very bigger degree down move, but between this down move there is going to be some pullback on the upside which we can expect. And there is a high possibility we completed wave B now on the lows, and we are going to start seeing some wave C on the upside back at the higher levels. So not to confuse, but to keep it simple, the entire rise which started from this low is a part of a triangle. We saw wave A on the upside. This entire up move which started from July onwards, from 19 July, the entire up move has been in the form of wave A. What we saw today is in the form of wave B. we are going to again see a pullback back towards 11,500 or 11,600 in the form of wave C, and that's how the markets are going to drag over next few weeks. So it's not going to be an investors market. This is going to be a traders market where you have to buy near the supports now and then sell near the resistance. However, so far from a short-term trading perspective, that's a bigger perspective. So if you are a swing trader, you need to keep a watch on those patterns. But if you are a short-term trader who is trading from 2 days or 3 days or 5 days horizon or probably intraday, you will still look for shorting opportunity as and when Nifty nears 11,300 odd levels, because that's how it's going to be. A lot of positions are stuck still at the higher levels, and they might start winding up on any pullbacks that we see, unless and until we see a very sharp reversal on the upside back above 11,330, 340, which is today's high. If we see a sharp reversal about 340 levels, then yes, the bears are trapped, and then we are going to see an upthrust again. And if we don't break 11,330, 340 levels, then we are going to be stuck in a range. So that's a broader perspective, and today's movement, you might start thinking about it because of some default news, something is happening in the market, but the markets were clearly giving that signal. It is headed lower. We have been bearish all the way over past 3 days. We have been bearish from, in fact, from 11,700, 11,800 levels also, and then Nifty has obliged by falling by more than 1,000 points at the latest event on Finbridge about few weeks back. I was talking and I said this down move is going to be very similar to what happened in February, and here is a classical confirmation of how the February was, how this kind of move again is repeated post February 2018 when we saw a very severe crash on the downside. So that's the power of Elliott wave, which I keep talking about, and that is why it's important that you should be aware about some such brilliant techniques which works. So for a clear strategy for the coming week, keep a watch on the mentioned levels. Refer the daily research report, the financial waves short-term update, in which I'm going to mention about what is the overall pattern which is being forming from 11,760 on the downside. What's the pattern? What is getting completed? And which levels, exact levels that you have to watch where you can turn bullish, or the levels where you have to go short on the markets again. So in the Monday's update, I'm going to talk about all of these scenarios and what is market going to do over next 1 week, 2 weeks, 3 weeks. I'll be talking about that as well in this Monday's update. So do not miss out the financial waves short-term research report, which is going to be published on Monday, and the trading strategy which we have been mentioning in our Nifty report has been working brilliantly. We have been expecting once the level low breaks, then Nifty should go down, and it has been behaving exactly as per that. It's not very often you see such highly predictable move. So I would say this was the predictable move. The crash was little uncertain because of the event, but the move on the downside was predictable, and that is what matters. If you are placed on the right side of the trend, that is the key, because you will not lose the money. Even if you are not making much, at least you are not losing money. That's the key. By keeping the capital protected, and you are going, if you are on the short side, you might have made a killing on the downside, provided you booked at least some of your profits once Nifty crashed below 11,000. So you have to have a very clear trading strategy in place if you want to trade on the markets. If you do not have a strategy, you are probably going to be just acting chaotic and giving away in your impulsive reactions, which is going to wipe you out, if not today, then maybe later. So have a strict stop loss, have a clear defined strategy. Nifty is forming a lower high and a lower low as per Dow theory. The trend remains negative unless we see a higher high, higher low formation, which we are going to mention in the research report. I am going to talk about a very clear path that Nifty might follow in the Monday's update, and the pattern looks very clear to me rather than chaotic at this point of time. That's it from my side. Stay tuned. This webinar will be available at 5 on the website as well. And I'm going to be publishing very soon the path that Nifty is going to follow over next 2 weeks, and how you can benefit from that. Keep referring the daily research report, the financial wave short-term update, and also the multi-bagger research report, because this is the opportune time for now entering into a multi-bagger stock, which has the potential to again rise in this volatile markets. Refer that research, and in case of any queries or doubt, please visit wavestrategy.com or contact us on 99204 22202 or write to us at helpdesk@wavesstrategy.com. Thank you. Have a wonderful weekend. See you again next week, same time on a Friday at 4.